It gives me great pleasure to welcome you to the Fintech Summit, WBAF 2019. My name is Lucy Chow, and I'm the Senator for the UAE, but for this afternoon, I'm going to be your MC. We have a full, packed afternoon. It's an understatement, I think. So what are we going to talk about? We're going to discuss financial inclusion. We're going to discuss the difficulty fintech startups have when they struggle to scale. We are going to discuss cashless societies, and we're going to discuss fintech startup collaboration models. So it gives me great pleasure to bring on stage our very distinguished keynote. If I could get you all to give us a round of applause to Mr. Matthew Gamser, Chief Executive Officer, SME Finance Forum, IFC.
Absolutely. I don't want to sit down. Yeah. And I don't want to talk from the podium. I hope you don't mind. As you heard, I'm Matt Gamser. I spoke at the FinTech meeting last year. Was anybody in the room there? Raise your hand. So that's a lot of pressure. There are at least two, so I got to say different things. But that's not a problem in FinTech. And I just want to sort of set the stage. You've got a few good issues already thrown at us by our kind MC. At the same time, I want to add one thing, which is I think not only do I want to talk about FinTech as a possible investment for angels, but I want to talk about FinTech as a possible agent or agency for business angels and their networks, because you all are special in that many of you not only have a background as angels, but you're organized angels. You're not just doing this on your own, you're working together. And there's some very interesting developments in FinTech that could be extremely interesting for the more organized of you. So last year, I want to very briefly reprise. Sorry for the two guys that heard this before, but you know, FinTech and inclusion, why is it so important? And it's so important because the simple fact is the cost, most people are excluded, including in rich countries, because the cost of understanding them, the cost of having the essential information to know who your client is and how you can serve them well, responsibly, is too expensive to get, or has been too expensive. And the reason is that the poorer people are, and the smaller their businesses are, the more they were doing their business in cash, their relationships with their buyers and suppliers on paper, and the goods that they had were here, there, and everywhere. You know, none of it was organized in any way that you could get a handle on except through one basic technology, which was basically wearing out your shoes to go out and see for yourself what was going on. And if we look at how we succeeded, whether it was in Central Europe, Eastern Europe, or in the emerging market countries, we basically solved that problem up until a few years ago by creating armies of trained staff, usually on, oh, you can sit there, I'm not going to go back there. No, please. And we created armies of trained staff who were usually on heavy performance-based contracts. And we said, we don't ever want to see you in headquarters. We don't ever want to see you in the branch. Just go out there and be working with the customers all the time. And we were able to make money doing that. But we were able to make money at a very low level of satisfaction of the market demand. In other words, we left, as you heard this morning, trillions of dollars of business on the table. And then was then, and now is now. More, and the big changer is this little gizmo here that virtually every one of you has one or more with you today. And the reason is that more and more people are using this as a main instrument for all aspects of doing if they're a consumer, their consumption, and if they're a business, their business relationships. And if they're a small business, they're using it for both. But the beauty is, it doesn't matter whether, you may not even need to see them. I could bring in someone from Ant Financial in China who would tell you, we have 300 million plus, 500 million plus customers. We can tell who's a business and who's a consumer by the network analysis of their cash transactions through Alipay. And I showed the slide about that last year. That's the real generally exciting stuff that's happening. So that's a tremendous promise. And the interesting thing is, it's a promise that's everywhere. In fact, the region, and I didn't say this last year, but so who wants to tell me what you think is the region of the world with the highest percentage, now region, not country, with the highest percentage of adults using mobile phone-based financial transactions regularly? Who wants to guess? Yes? China's not a continent. It's not a region. China's got a very high use. So you are correct, but not for a region. Who? Sorry? Asia. No, Asia is not the region with the highest. Yes? Africa. More than 20% of African adults are using mobile phone-based products regularly. And that's why it's no wonder that the epicenter for a lot of this development, there's some great stuff happening in China, and hopefully we can talk about that later. But Africa is also a big innovation center, and there's lots of fintech growing up. And even, just to tell you, personalize this a little bit, I run a network of banks and development banks and fintechs that are all interested in small business finance. I work for the IFC, private sector arm of the World Bank, but I don't do IFC business now. I'm busy being a matchmaker and cheerleader or networker. And we had Wells Fargo join as one of our early members. Now, Wells Fargo is one of the banks, one of the few big banks that was serious about digital early. There are a lot of reasons for that I won't go into, but Wells Fargo, since the early 1990s, was doing what most banks are just starting to think about now. Data-driven, very heavily tech-oriented, artificial intelligence, all these things. They've been working on it for years. And I said to my friends there, I said, I really am grateful that you joined the network, but that was just a CSR thing, right? You weren't doing this because you really actually hope to learn anything. They said, well, Matt, you'd actually be surprised because in the US, for various reasons, our mobile phone-based and our payment systems are a little bit behind. And some of these guys in Africa, they're doing things that we're just getting around to being able to do in the US, and we do actually learn a bit. So the world is changing very radically. And fintech is one of the places where it's changing the most, and in the most exciting way. Now, that doesn't mean it's going to be easy and you can just pick any fintech and make it, because let's take certain areas of fintech that get a lot of attention, like alternative lending. Well, you add all the alternative lending together in the world, and even if you add in the Chinese lending, and even if we call institutions like Ant Financial, which is Alibaba's arm, which has a banking status in China, if we include them, even though probably we shouldn't because they're a little bit different than a pure crowdfunder or peer-to-peer, it's still a tiny, tiny fraction of the lending that banks are doing, that regulated institutions are doing. But it's growing fast. So it doesn't mean that fintech has changed the world, and increasingly we're starting to realize that it's not about, are the banks going to go away and fintech's going to take over, or are the fintech's going to fizzle out and the banks are going to take over. It's probably both are going to stay around, and what's going to change is the way in which they work together. And the very latest, which is going to be a prelude for what we're going to talk about in a panel in a minute, is that more and more it's not just the banks and the fintechs, but it's the banks and the fintechs and a whole bunch of companies that started out in the real sector. In other words, they were buying things or selling things, or they were tech platforms, or they were maybe e-commerce platforms or logistics companies. And suddenly these guys are some of the biggest new players in finance. And so there's a whole three-legged stool going on of players, in all of which are innovating like crazy using technology as a whole changing way that they deal with with the people that we started with, those 1.4 billion now today, was 2 billion 6 years ago, that didn't have any access to any formal financial service, and the many, many more billions who are underserved. So these folks are being chased, their numbers are going down, they're being chased by an increasingly complex group of institutions. And the other thing that's changing is it's not just about trying to figure out how to finance them. There's more and more integration of, and this is where it gets into angel space as an agency and not just as an investment, that it's also about how can these very same technologies not only help us to do a better job of financing small and medium enterprises or poor consumers, but how can they help those same clients run their own lives better, to be more structured or formal, as some countries say, be more efficient, more productive, if their enterprises grow faster, create more jobs, make more profits, if their consumers manage their finances better, be more literate, be more on top of changes, in ways that, again, in those non-financial areas, we'd encountered the same problems too, for the same reasons. It was hard to reach those people. They were far away, knowing what was going on, and what we know that training is most effective, as was said earlier today, when it's applied when needed. But we didn't know when, because we can't be in those people's houses and in their businesses and know when the opportune time is. Or we couldn't know that before. But now, if we're electronically connected to them, if we're electronically connected to their finances through things like electronic money replacing cash, whether it's through cards or phones or internet banking or any other way, whether we're connected to the things that they're transferring of value through the Internet of Things. And if in consumers, we can be inside your car and learn how you're driving and adjust your insurance. There are many companies doing that already, right? If we can be inside your refrigerator. This gets kind of scary, and that's about where I'm going to go to in a minute. But, but we can also be in your arrangements. And that's the beauty of distributed ledger, which I'm deliberately using the concept distributed ledger and not cryptocurrency, because it's about the connective system and this decentralized means of keeping track, and that is going to enable us to have much better ways of monitoring these interactions, of creating non-mess-upable, to use a complex term, records that everybody can see of who's making what deal with whom, of how items are moving from place to place. And all this puts those other two transformations together and enables us to do this in a way that we could do it before, but because we were using paper and contracts and lawyers and notaries below a certain value, it just didn't make any sense. And it was incredibly slow. So the big guys found workarounds for that. How do big banks and big companies do trade agreements? They have this, what we call open account in the IFC trade business. It means you're big, I'm big, we kind of got to know each other, I trust you, so we just sort of run this. But no way a little guy is going to get, or a little woman is going to get that deal. And so you get this deal where there's all this paperwork and stamping and processing and errors and re-errors and disputes, but now all this could change. But it all depends, critically, on something that we weren't particularly bothered about a few years ago, because this was only happening on a small scale. And it only works, we've had credit bureaus and things, for example, for a long time, Experian, Equifax, Dun & Bradstreet, CRIF, but they were something that most of us didn't really think about. And we knew if you were interested in the financial sector, that their presence seemed to get more people access to finance. That's been empirically proven, but still left most people out, because most people didn't exist in that world. Now the beauty is that the sort of transactions that everyday people are making can be stored, can be analyzed. And the best example of this, again, you can see in places like China, where China's got a credit bureau. in the People's Bank of China. No one, looks like no one from China in the audience. I don't want to get myself in trouble here, but it's fair to say that that's a very large credit bureau with respect to how many numbers of individuals are contained. I believe it's about 800 million people. But most of the files are very thin because the banking relationships, which is what's stored there, is very minimal. But by contrast, Alibaba, Tencent, and Baidu have information on probably cumulatively more than 800 million Chinese. I don't know the number today, but they have meaningful information about every day, what they're buying, what they're selling. And then it's linked to their platforms of, if you're a social media platform, who they're talking to. If you're a trade platform like Alibaba, what they're selling, how they're rated by their customers. This is immensely valuable information. And in China, it's information that so far is allowed to flow reasonably freely, but inside 3 monopolies that the government of China is comfortable with. In the rest of the world, getting to that sort of magical ecosystem is going to be a little bit more challenging. First and foremost, because as we go from country to country, many of us have radically different thoughts about how this all should work, and in particular, to what extent we should allow this exchange and what sort of permissioning should be necessary so that this sort of expanded electronic information can flow. And in particular, as I said this morning, people in rich countries tend to see this and get creeped out. You're going to know what my refrigerator has in it today? Wow, that's really, I don't want that. I want to opt out. But if you're a farmer in Western Kenya, and for the first time someone's talking to you that you could have crop insurance, or if you go talk to Julius, who's going to give a presentation maybe later today or somewhere else during this session, you could even have futures contracts on your little tiny, less than 1 acre, less than half a hectare for the metric people here, farm. And all you have to do is let a drone be flying over it and sensing the soil moisture and taking pictures of the crops. And the farmer has to allow the GPS on his cell phone to be monitored so we see where he goes and how he's moving with the crop. I mean, most people in that environment say, I'm going to get something I never dreamed of. Of course you can have it. I don't see any downside. But, is one right and the other wrong? No, they're both right, but they come from different places. And resolving, that's going to be one of the things that, whether we're looking on this as an investment, or whether we're looking on this as an agency, or whether we're looking on this from a government as how do I handle this, that's going to be this balance between potential of data and sharing of data and data governance and privacy is going to be where the rubber hits the road, as we say in English on this. This is going to be the critical thing, because how that gets decided is going to really can influence fundamentally what happens with an individual fintech's fate, because so many of them, whether they're working on lending or ID or look at the different areas, or channels, alternative channels, or scoring, or insurance, you name all the different areas, even robo-investing and things, they all require a certain certainty about data access and movement. And if you have an environment where that's reasonably certain, then it's easier to figure out how to invest and also how to use for your own purposes, rather than if you're in an environment where you're not sure where it's going to go. And that's one of the reasons that I think you can explain behind the GDPR, the General Data Protection Regulations that were passed in Europe, and also behind the PSD2, the Payment Systems Directive number 2, which kind of, but they both influence things in slightly opposite directions, without wanting to go into a lot of detail, because the General Data Protection Regulations are about making sure that there is user consent, and we know what we've let out and how it can be used, and there are penalties for abusing that trust. By contrast, the Payment System Directive is taking away from the banks, who historically have been the only ones who had access to a lot of this relevant transactional information. There are a few other companies like public utilities and others, but it's making the banks open that up. If I agree that maybe I never had a loan from that bank, but I've managed a current account for a long time, And PSD2 means if I want you to see my financial history, you can see that now. If you show that you have my permission from my other financial services provider to ask the bank. Now the banks are saying, well, hang on, you're applying this and it's applying to us and you know how to apply it to us, but it's now got to apply to go back to my statement about all these other characters are getting this. Are you going to apply that to Google? And which they are. Are you going to apply it to DHL, to FedEx, which I'm not sure they're doing yet? Are you going to apply, there's so many actors here. Are you going to apply it to Unilever, who's selling fast-moving consumer goods through a series of wholesalers? Are you going to apply it to some of the big commodity traders like Glencore and others who are buying in chains that now extend out to many, many, many small natural resource commodity or agri-commodity suppliers? So we don't know how this is going to play out, but at the one time, our digital capacity is enabling us to do so much more and to manage in a more formalized way these larger relationships. But we're going to have to do it within the governance that's prescribed by an evolving set of regulations. So it's a challenging, maybe let me leave the environment like that and in order to set the stage. And because we've got some real fintech investors and people that are involved more day to day in creating ecosystems that fintechs are working in, and I want to give them a chance to get in and maybe go to our next step here.
That's great. Can we get a round of applause for Matthew, please?